Hi, welcome to Willow Oak Asset Management's Value Hour. My name is Stephen Kiel. I'm here with a special Berkshire edition to talk about our thoughts from Jeremy Deal at JDP Capital and Thomas Braziel at 507 Capital. How are you guys this morning?
Great.
Good.
Yeah.
It's good to have you. We watched
Thanks
the
for having
meeting this past weekend. It was disappointing we couldn't do it in person, but at least we can, we were able to watch it for a few hours virtually through the Yahoo website. It looked like Becky Quick was working from home, as many of us are as well. So let me kick it over to you, Jeremy. I'd love to hear right off the bat what your takeaways were from the meeting.
Well, I was watching it pretty late at night here in Amsterdam with some other fund manager friends, and we stayed up to watch it. And my first takeaway was, why is it so late this year? Why isn't it earlier? I don't know. The second thing I noticed was that Warren seemed really disappointed that he wasn't able, that people weren't there, and I could kind of feel that, and that it was kind of sad. And but overall, I thought it was a really good show. He went all out to be the teacher that he is, and remind us that it's a long-term game.
Yeah, absolutely. And Thomas, how about yourself?
I'm gonna be Charlie Munger in this. I have nothing to add.
I'll say from my perspective, it was disappointing. Not just to, we go there every year, and most of us do, and we have different events and there's things going on. Obviously, Willow Oak had an event planned. We've done that for several years in person, so it is disappointing to do it virtually instead. And I think, think about all of those businesses, those events surrounding the event, the Markel breakfast, the happy hours, the camaraderie that just wasn't able to happen. I do wonder, to you guys, hopefully we'll be able to be back in person next year. But, is the future really virtual in this way, with these virtual meetings, or do we really lose something tangible by not being able to kind of have that in-person camaraderie?
Well, there's a lot of the workplace that probably can be done at home, but at the same time, we just get so much out of coming together, and the energy that we get from meeting new people and getting in the same area as like-minded people and having a cup of coffee. I remember the first year I went to Berkshire, I was standing in line for coffee at the break, and I met several, like these famous managers. I couldn't believe it. And I met several of the Berkshire CEOs that I had read about, and it was just interesting to see them. A couple of them I introduced myself to, and just the energy I got from that, I'll never forget, and wouldn't have been possible through Zoom. And I don't know, there's definitely a lot of intangible value about being somewhere in person, or somewhere in person that you want to be, at least.
Yeah. And the big thing there with Greg Abel being there as well, it was probably considered a little unsafe for Charlie Munger to travel, for Ajit Jain, to travel as well. It seemed to be the rationale for having Greg up there, just Greg, with Warren, was Greg was nearby. Greg could drive in. He didn't have to fly in. And with Ajit, look, Ajit's older too, and certainly Munger is 96, and so it really was not worth the risk to have them potentially be exposed to things by traveling. Since you had the nothing to add comment, Thomas, what was your thoughts on Greg Abel kind of replacing Munger at the meeting?
I suppose it's a logistical thing, but I guess it is still nice to kind of see the younger, I assume, heir apparent for the non-insurance side of Berkshire. So I enjoyed that part. I mean, it's great to see Munger. Munger, it's kind of, Buffett gives you a lot of meat on a question, when he's giving you an answer. Munger every now and then will give you a nugget, but it's kind of like back in the day, you used to go to the Leucadia meetings before it was Leucadia Jeffries, and both guys are a little Mungerish. I mean, if you ask a question they don't like, they used to tell you to sell your stock. So I don't mind the more color that you get from some of the others. So I enjoyed that bit, and yeah.
Yeah, I did too. I'd echo that and say it was really nice to have a little bit of color around even Berkshire Energy, for example. And somebody that sees it every day, and it's comforting. We all kind of know and trust and believe that it's there, and those people that want to go through the numbers can see the numbers as much as are disclosed. But it's really nice to have access to Greg Abel up there, at least even for a few hours, to get color that around things that we probably wouldn't have been able to before. So I'd like to see that continue.
And he clearly had a great rapport with Warren. You could almost kind of picture how the two of them talk, in a
Yeah.
meeting or on the phone. He seems to fit the culture perfectly. He's, humble, very, very intelligent, though, willing to disagree on occasion as well. They had several references to Munger's interview from last week, where Munger had made a comment about, well, nobody's calling us. And I think Abel at one point kind of lightly rebuked that. Nobody's calling them for $50 billion acquisitions, but they are calling them for smaller things, and those calls probably go to Greg and the others. So that was interesting to see him up there. The way the meeting started, there was an hour and a half monologue almost from Buffett. It was almost an hour and a half, and it did go longer than I think what we all expected, with the meeting starting so late in the afternoon. I don't think any of us expected it to last, to such a degree that it was almost like a normal meeting. And what did you guys think of that kind of teaching moment, that monologue, those comments about America?
Very fascinating. Living in Europe, I know Thomas also lives in Europe, but I'm in the Netherlands, and it's a really old country, and a lot of the buildings, even the building that I live in, the building I'm in is older than America, and I think about that every time I come in and out of it, and that it's incredible to sit back and think how much has been created in a relatively short period of time, and the culture and the secret sauce that made it great will allow it to climb out of the problems that we have now, and just like it will in the future. And it is important to kind of look longer term and not be so focused on the quarter. But that's what all great investors have in common, is they're able to look past the quarter, even to look past the year, and look and see how things should look in the next year or 2 years. And that's probably one of the most important lessons that Buffett teaches us. So yeah, I enjoyed it. Slides were funny though. I didn't have much help with those slides.
I loved it. I'm down. I mean, that part about long-termism it was great when he walked through, like, 30s to 50s, and like people don't necessarily respect the fact that, what's your performance this year? What's your performance over 5 years, even 10 years? I mean, he's talking about how long you can get, not significant underperformance, but significant, sort of cycles or movements in the stock market. And it really can be your friend, but of course, professional money managers, it's very difficult to remember that, because the siren song is, short-termism. What's this quarter? What's the performance benchmark this year, this half year? I mean, that's really a drop in the ocean of, do you think about if you had, $100 million and you were an old, family, would you really think about it in terms of quarters, or like would you think about it in terms of compounding over a generation or something? So
yeah,
I think he reminds us that in like his Warren way. So I enjoyed all that parts, and it's hard to remember. It's almost like you go to church to remember sort of what you believe in. I feel like Buffett is in a weird way. Yeah, I guess for long-term compounders, you're for guys that are trying to compound their capital, Buffett is like that. It's like a pilgrimage to their sort of remind yourself of what you're really trying to accomplish, and because it's very easy to get distracted by noise, and so I enjoy that bit.
Yeah, I wonder, he kind of made a comment that, he would recommend buying kind of the SP 500 if you're going to hold it now for 20 or 30 years, which I think he recognizes then with that comment. He's kind of bearish in that sense. Maybe bearish, it's kind of too much of a generalized word, but cautious. And you've seen him make these comments in the past when there were time periods where maybe the market was overvalued, or the market was not fully appreciating the risk that was currently in the market, where he'll say, we want to look over 20, 30 years, you buy the index, get into stocks, get into equities, own a piece of America through these companies. don't know what'll happen in the next few years. But of course, when the market's undervalued considerably, he can make actual bets. I mean, in late 08, early 09, some of the bets that he made in different companies, that's not happening right now. He's extending the timeline because there seems to be these feelings of overvaluation. So I'd love to hear kind of your take on, Berkshire didn't really do very many buybacks. Berkshire was selling stock, and they sold stock in April. Stocks companies that they owned. What do you think? Is he bearish, or is there something else going on in the background we might not be aware of?
Go ahead, Jeremy. What you got?
A couple things I noticed was that he and kind of comparing what he was saying also to the interview that he gave the day before, kind of talking about that somebody asked him about FANG, and he said, yeah, FANG they're amazing companies with the exception of that none of them need capital to continue growing, and that has an enormous amount of value. And he for the exception of Netflix, which seems to, I guess, need more capital than Google or Facebook or Apple or Microsoft. And he referenced the importance of that as a different dynamic than the traditional businesses that always needed lots of capital to grow. And so and the undertone of what he was saying was, well, we talked about also missing Google and missing big tech. And one of the greatest things about them is they don't need capital to continue growing. And maybe from that perspective, they're not overvalued. But other parts of the market may be overvalued if they need capital, like he was sort of implying with airlines, for example, as a general sector. And so when you mash those all together, it makes it difficult for investors to come to a conclusion about the broader S&P 500, because the S&P 500 is made up of high quality companies that don't need capital to continue growing and will actually get stronger during a downturn. And then has a lot of companies that are the complete opposite. So kind of putting those all together is probably the easiest way to say, yeah, that's not a bad place to put your money. But I don't know. I was inferring that what he was saying of, if you do have the ability to pick a company that doesn't need additional capital and will continue, in order to continue to grow, and a company that has a really great balance sheet will continue to grow. So not only will it survive, but it will thrive, because there's a lot of companies that will just survive, but that's not enough if you're going to be an individual stock picker. But if you can't do that, kind of back to what Ben Graham used to say, just if you're going to be passive, just own the index, and you'll get a piece of those amazing companies, probably an outsized piece of them, but you also get a piece of the underperforming companies. And together, it's better than what you could do buying bonds or sitting in cash or even maybe some traditional fixed income like real estate.
I mean, I don't know. Is Buffett ever really bullish or bearish? I feel like that's not something that he thinks
I think
about.
the word might not even, the definition may not even apply, but maybe the word cautious or,
Yeah,
I guess, maybe question back to you, would you rather own Berkshire or would you rather own the S&P 500 right now for the next couple of years?
I would take Berkshire over the S&P, but
why then? But why?
I feel like he's always looking for inexorable truths, which is a great investment pillar to have, right? If you can find inexorable truths. So for him, the inexorable truth is, America, the experiment of American entrepreneurialism has worked in spades. And so he's willing to put that bet out there and share it openly. But, and he gives us general ideas of where he thinks the markets are. And I don't think anyone would say the markets have, yes, we had a big carve down and there a big drop down and then sort of came right back. So and so that's interesting about the FANGs. I hadn't heard that interview, Jeremy. But for him, I think those inexorable truths are the ones he's betting on. So I don't know that he's ever bullish or bearish. But
that interview was interesting, Jeremy. I saw it as well, and with the comment about Netflix, because he had not missed, but I saw something the other day where he spoke to Glenn Greenberg many years ago, 15 years ago or so, about the cable companies and the John Malone vehicles, the other Comcast and things like that. And Buffett was not interested in them. He was skeptical about the free cash flow generation from those types of companies. And so it was interesting that, if you think about Netflix and the content generation and the expenses associated with that now, it's there's some parallels to be made for that discussion. And, we'll see how Netflix turns out over the next, 10 or 15 or 20 years to see if in fact they are able to generate cash flow, free cash flow going forward or not, or whether it is continues to be a capital raising kind of necessity situation. I guess two more relatively quick things here. I'd love to hear. Look, he was selling stock during the quarter. They sold the airline stocks in April. Sold about $6 billion worth of equities, and they purchased about 450 million, somewhere around there. And Buffett didn't even know what it is that they bought. It clearly was Ted and Todd who were buying. What are your thoughts on those actions?
He's got enormous exposure. Thomas and I were talking about this before. He has enormous exposure to the airline industry through Precision Castparts, through NetJets, and through, I forgot the name of the simulator company, pilot simulator company. So flight safety. So I guess it makes sense to pare back that exposure. I think NetJets has something like 700 aircrafts, which puts it at a similar size of Southwest Airlines. It's not that much smaller than even Delta, which has maybe 800 or not maybe 900 aircraft. So he fully owns one of the largest airlines in the world through NetJets. So that doesn't surprise me, I guess. I never, I didn't own the sector, but I'd always observed it as, kind of through the same lens that he probably was looking at the rails with, is that as the large airlines become larger, the opportunity actually grows for pricing power, become less commoditized. The small players, leave the market, and then, it becomes something more with higher returns on equity with less cyclicality. And it seems like, to me, at first glance, that this is kind of this crisis is what will happen to the top kind of airlines, maybe Delta, maybe it's Southwest. Whoever survives this is probably going to come out of it a lot stronger. So I was a little bit surprised that he would sell all of them and not just try to pick a winner, considering that, maybe there's a, kind of a case for the economics to be a lot better out of the as we come out of this. But and I guess maybe it makes sense considering his overall exposure.
Yeah, could be. I thought it was interesting. I'm surprised he sold the whole lot. I'm surprised he didn't. I mean, I guess his theory was sort of facts change. I changed my mind, but I tend to agree that, I mean, the whole thesis behind not only Buffett but a lot of sort of institutional money that were in sort of the larger carriers was that, the rationalized, the routes and the players, and there's going to be more pricing power, and all the guys running them are just being more rational in terms of competition. And even people were talking about, I read a Barclays Capital piece, they were talking about how a lot of the national carriers in Europe are going to be put under by this. Even with government support, it's going to be very hard for them to compete. And so it really leaves the top tier guys. And so it's not winner take all, but it's winner take, monopolistic pricing power. And so it kind of played into that thesis. So I kind of looked a little bit at the airlines thinking they'd be interesting to look at. So I was a little surprised when saying this whole thing, the whole stakes, but maybe you're right, Jeremy. Maybe it's more of
I went back and I listened to the Delta call after that today. Actually, I listened to the most recent Delta call, and it definitely echoes that. It echoes the future of the industry being smaller, being more expensive, being more of a luxury thing, being more of a luxury product.
Right, you don't have the race
right. Yeah, it take the middle seats out. It seems like at least they would. Ideally, these guys come out, the top become really great companies in the end. So I guess to your point, Thomas, that I don't know, like Buffett said, he said, he wishes them the best. He thinks the operators are really great people, I guess, and maybe just considering where they are, where he is in life and where Berkshire is and his age and kind of where he is, it wasn't a fit, and his existing exposure, just he didn't want to take that bet. But I don't know if that necessarily means that the top airlines are dead. I don't know if that means that everybody should sell them. I don't know if people should take what he does as complete gospel just because he buys or sells something. Isn't, wasn't gospel to buy IBM. There are a lot of people that followed him into IBM were completely burned. And a lot of, just because he buys or sells something doesn't necessarily mean that that's gospel. So
Yeah, do your own work. I mean, I think
hard to remember that.
I mean, my kind of thought on, I completely agree. Why not pick a winner? Why? But I think the problem is, he's trying to put so much money to work. It was an industry bet, and so if it's even a $5 billion thing is not enough to really move the needle in terms of acquisition. So, he would either have to buy one airline outright, which I don't think he would ever do. Forget about maybe Southwest, but I don't think he'd ever do that. I think he said he would never do that before, because you have union issues, things he doesn't want to deal with. And again, like you said, he has exposure throughout from other industry or from other companies that they own. And it would have been interesting if he would have chosen one and ran with it, but I don't know. It might have been more of an issue of size, quite frankly. So yeah, why don't we end it at that? I appreciate you guys getting together here for this. Any kind of brief closing thoughts or anything final kind of takeaways as we send off?
Well, I'm really excited about getting on a Delta flight and flying to Omaha next year.
Yeah, that'd be fun. Sounds good. Let's do it. Yeah, I don't think Zoom's taking over the world or whatever this is. Open table meeting, whatever.
Well, we'll all be in person, but we won't be shaking hands. We'll be kicking feet or something like that to introduce ourselves, or
Corona bump.
Okay.
Yeah, we can salute each other.
Yeah. Well, all right, guys. Thanks for coming together for Willow Oak Asset Management's happy hour here, special Berkshire edition. Appreciate your thoughts and feedback and takeaways. It's fun talking with you both, of course. Look forward to next time.
Yeah. See you guys.
All right, boys. See you guys.
Bye.